Welcome to the Me the Money Show. I'm Dan Barnes, Editorial Director at Markets Media Europe. I'm joined today by Terry Flanagan, the editor at Markets Media. Terry, welcome back to the show.
Hey, Dan, thanks for having me.
So I understand you've been writing about automation on the sell side recently. Could you tell us how and where you see dealers increasing automation in their trading processes at the moment?
Yeah, what we're working on, Dan, is it's a white paper, and then it will be also published in a series of articles on markets media. And really, so I've done recently a deep dive on the topic of automation on the sell side. This isn't a new topic necessarily, but what the story is, or what the news is that it has been expanding quite a bit recently, particularly in fixed income and derivative asset classes, which are historically OTC markets.
Yeah.
And really, the emphasis is, when you think about automation on the sell side, it automates processes, it streamlines, it makes for efficiencies, and it reduces costs. But what's really been emphasized to me is that the primary rationale is to free up human traders to get involved in the larger, more complex trades that aren't really suited for automation at this moment. So it's more of a way to gain business and win business and from the buy side, because the sell side folks who lead on automation will be the ones with the most senior trader bandwidth available to help the buy side.
Okay. So whereabouts do you see the greatest opportunity for change at the moment?
Right. Well, I think one of the things that's interesting too, going back to my point about the buy side, is that they do have, the buy side has great readily available options to get involved in passive strategies or low cost ETFs. So the sell side really does need a differentiator, it needs a value added, and this automation is one way they can do that. But so one of the things, just going back on a little background, equities trading is very much electronic now, 95% electronic. Much different story in fixed income. The latest data I was looking at, and approximately 60% of treasuries and 30% of corporate bonds trading is electronic. So really what that means is there's a lot of trades in those very large markets that still need a human touch. And it kind of goes back to the point, what sell side desk will be the best partners for the buy side in executing some of these large, complex, say, credit trades, derivative trades, swaps trades. And to a large extent, it will be the firms that do the best on automation. The ones that can automate the processes that can be automated will not need human traders to get involved in that, or to get stuck in that, and they will be available to handle the buy side's big business, and that's what they'll ultimately be remembered for when it comes for a buy side to renew their business.
Sure. And what's the effect on things like trade size?
Right. Well, trade size is certainly, historically in fixed income, automation has been a story of odd lot, smaller trades. I think the kind of the routine, everyday trades, that's what has been automated. There has been a reticence to move up the trade size ladder on that. It is happening very slowly in a tentative way. Some of the issues are, when you start looking at some of the bigger trades, there's a lack of liquidity. It might be a lack of liquidity in the market, and also price transparency adds risk here. And automation is thought to be not quite there yet in handling the larger trade sizes. What's interesting is, one of the in my research, someone asked the question, why is that? And it's not really sure, but it's some combination, possibly some technological limitations that still exist. Certainly data constraints, especially in fixed income market, that's a evolving story. There's a lot of room for improvement there. And also, it might even be some human bias about what automation is capable and what it isn't capable of. The premise being that traders might think, well, automation doesn't do these larger trades, hence they can't do it, so we can't really explore that. But in a slow, gradual, incremental fashion, it is moving up the trade ladder in fixed income.
Yeah. Well, that makes complete sense. I suppose as the process is explored and as that's explored as a way of engaging in trading, people get more confident and are able to put more risk into those trades.
Right.
Okay.
Sure.
And how does it affect the workflow beyond the front office?
Right. That was the front office is the most visible to the buy side, and that's where the buy side is going to see the
Yeah.
direct results of automation. But certainly the middle office and back office, which supports the front office, the trading desk, automation has a longer history in those areas, and that's where a lot of the kind of routine and mundane tasks are that can be automated. And again, so it's not a new story, automation in the back office and middle office, but what is new is that there are a lot of been regulations in recent years, particularly MiFID II, that we require a great deal more trade reporting in fixed income and derivatives and some of the asset classes that historically were OTC. So to have this trade reporting, and it's really voluminous trade reporting, you need to be on top of your automation game. And again, it goes back to the point: this the sell side desks that have the middle office and back office most automated will be best equipped to help support the front office, and that front office will be best equipped to partner with the buy side and win and retain buy side business.
That
So
makes a
that's
lot
the
of
connect
sense.
the dots, so to speak.
Yeah, absolutely. And then how do you see this evolving in the future?
Right. The future is, and one of the points of emphasis, this might go back to one of my earlier points, it's not automation's not to cut costs or to streamline processes. It is to a certain extent, but it's more an offensive maneuver, really, because it's about
Mhm.
winning and retaining buy side business. I saw some industry data. This is a Celent data point where 73% of capital markets participants expect that increasing revenue will be the business focus of the trading desk over the next 3 years.
Yep.
27% expect the focus to be cost cuts. And that 73%, the 27% expect to be cost cuts has been cost cuts the focus over the past 3 years. 68% said the cost cuts were the focus. So there is this expectation, at least, that the trading desk is more going on offense, more going to prioritize top line revenue versus cost cuts. And this fits right in because automation's most important objective is to win, retain, and expand buy side business. And the sell side firms that are leaders on automation are expected to, do the best, be the best partners with the buy side, and ultimately differentiate themselves from the ones who may be struggling with automation.
That's great. Excellent. Terry, thank you very much.
Thank you, Dan. Appreciate it.